Another video. Now I'm going to give you guys the usual weekly market breakdown where we are going to take a look at the Nasdaq, the Dow Jones, SNP500, the GER30 as well as the UK100 index, which is two new faces to be added to watch list for this week. If you're new here, the sub would be appreciated as I provide valuable educational content, and if you enjoy the video, a thumbs up would be appreciated as well. Now we're first going to look at what kind of fundamental data we've got coming out this week, but it is important, and I'm probably going to speak to myself when I say this. It is probably the best thing to stay out of the market for the long term this week, because the amount of high impact news that we got coming out this week is probably enough to make certain people go, okay, I'm not gonna trade this. Disciplined people, and then undisciplined people will probably go like, yeah, buy stop, sell stop, and cross fingers, trade and trade and pray. That's how some people trade nowadays. So the first thing we need to look at here is we've got the consumer confidence coming through. Now, if you are a veteran on this channel, but now you should know what the consumer confidence means. It basically tells us what how confident the people or the consumers are in the economy over the next 12 months. Then we also got the FOMC statement, which is the most important piece. We've got the Federal Reserve expecting to hike interest rates by 0.75 basis points, the same thing that we saw the previous month. However, we might potentially get a one basis point there as well, especially with inflation that rose 9.1% in June. Now remember, the only way to tackle inflation is to hike interest rates. Now, because the inflation came out higher than expected, there is a possibility that the Federal Reserve could hike interest rates higher than the 0.75 as anticipated by this forecast, by the investors' forecast over here. Anything higher than 0.75 will aggressively send the market to the stock market to the downside. Anything lower than this could potentially we will see the continuation in the bullish momentum on the stock market. But because of this 9.1% inflation, there is no it is impossible for the Federal Reserve not to hike interest rates at 0.75 as a basis. But like I said, we could potentially see a 1% basis point hike, and this is why I want to urge you guys, it's probably the best thing to stay out of the market between, especially after Wednesday. Like, you could probably go in there Monday and Tuesday maybe, but the market's probably just going to trade sideways for the 2 days. But I'd probably say, if you don't have statistic fundamental data that's going to put you in a certain position to say that this is certainly going to happen, then I would suggest that you go do the research and then go and trade what you have found, as opposed to thinking what might happen. And for those of you, I always say it's best to trade what you know after the information comes out than to predict what you think might happen, because nobody knows this data until it gets published, other than the president and the people that sits on the federal chair, Powell and his gang. And then we got the FOMC press conference, and then we also got the advanced GDP. Now, it's very important to keep in mind that the pace of the GDP growth is anticipated to weaken from its recent very high levels to 2.5% in 2022 and 1.2% in 2023. We also saw that the GDP hasn't looked too nice for the past 2 months. First came through at a negative 1.5, then a negative 1.6. It's now forecasted to come through at a 0.4. The problem is supply disruptions may take up some time to fully ease, especially given the impacts of the war that in Ukraine, and COVID-related lockdowns still continuing in China. But we do know that wage growth will continue, as we saw the Dow Jones anticipated when the NFP data was released. Also, the labor market is expected to remain tight despite an increase in labor force participation, as receding health risk in higher wages from workers to return to the labor force. Inflation will remain above the Federal Reserve's 2% target at the end of 2023. If the inflation is sitting at 9.1%, and Powell's target is to get it below 2%, then trust me, it's going to take a lot of work, because we are almost at the end of the year. And it's going to take a very high interest rate hike to get this data, to get it down to where it's supposed to be. But this target was set by the Feds for the end of 2023. So they've got until next year, the end of next year, to bring this target down. The thing is, I think the reason why supply chains are still disrupted, it comes back to the fact that there's not much happening in the US. Because why is supply chains disrupted due to lockdowns in China? I mean, like, doesn't any work get done in the US? You understand? So it just shows you how much of the work or how much of the economy, the US economy, relies on China. And it's not just the US, I guess it's everyone else. If you look at any packaging, you'll see it's made in China. But in any case, the further significant normalization of the monetary policy will weigh on the economic growth. The expiration of the pandemic-related support measures means fiscal policies will also have a very, very, very big influence on there as well. Although the spending and accumulated fiscal transfers by household and subnational governments could partially offset this effect, the authorities should always be ready to provide temporary fiscal support for vulnerable groups in the event of an unexpected slowdown. And that isn't even a question anymore, because again, we had a negative 1.5, we had a negative 1.6. We are getting skewed here with the 0.4%. But if we do get a negative reading again, then that is a recession for the US, and there's no question about that. Any case, now we are going to go and start with the Nasdaq from a technical perspective. Now, it's very important to keep in mind, if the Federal Reserve Federal Reserve is expected to hike interest rates by 0.75% basis point, right? That's the expectation. If it does come through, the stock market is going to fall. That is the Nasdaq, the Dow Jones, and the SNP500, because they're all US stocks, and interest rates related to the US economy negatively impacts the stock market. Because go and watch the video I've made on the recession and you'll understand exactly how that works as well. Now, if you start on the monthly time frame, what do we see? Now, from a monthly perspective, I've always spoken about this level over here that I expected the market to pull back. Now, if you've watched my previous Nasdaq video, I said we've made this massive impulse. After an impulse, you expect a correction, and the best way to measure that correction is by taking your Fibonacci from the high to the low of the impulse. And I said that we can expect the market to pull back to the 0.382. However, I wanted to see the market pull back to this wick of that red candle over there, because this level over here acted as a strong level of resistance. The market broke above that, came to test it as support. Support did not hold. The market broke below support, came back to test it as resistance. And we cannot say that resistance has not held or hold, because the month is not done. However, we can expect the stock market to probably continue to the downside in the short term there as well. Now, from a weekly perspective, what do we see? Now, here on the weekly time frame, the market had not really gone to test that previous level of resistance. Now, this is where it comes in. When that high impact fundamental data gets released, we could see the market potentially hit that level up there and then continue this move to the downside. But as traders, we have to be reactive, not predictive, and learn to adapt to the ever-changing market environment. Now, what do we have over here? Firstly, we can see how the market printed the strong level of resistance. Now, we know that once resistance gets broken, it becomes support. So there's a good possibility that we could see the Nasdaq pull back to this level over here, starting at the start of next week, and then potentially see the market continue higher if the Federal Reserve hikes the interest rates less than a 0.75% basis point as anticipated by investors there as well. Alternatively, if the market doesn't get what they're looking for, then the stock market will then continue this move to the upside. If the market does get what they want, then you can expect the Nasdaq or the stock market in general to continue to the downside. Now, on the daily time frame, what do we see? Now, if you remember the video that I did last week Sunday, I said that we can firstly expect when the market was sitting at this level, and you can count here 1, 2, 3, 4, 5. This is where the week started, and I explained all of the reasons for why we can see the market there. Then I said we need to monitor the price. If we do get a clear break above that, we can expect the market to go and hit that level, which is exactly what the market has done. Then you can always just go back to the video that I've published last week as a further reference point for yourself. Now, what do we have over here? Firstly, we have this massive impulse, and we've got this correction. Now, if you take your Fibonacci from the low to the high of this massive impulse, firstly, you can see that we've got a 61.8 that's lining up perfectly with this previous level of resistance that is now acting as a level of Exactly, support. We can also see how the market had tested this previous level of support, and that level of support, the market broke below that, came to test it as resistance. Then this candle started to print on Friday. Now, I don't trade on a Friday, so I did not get in there as well. But one thing I can tell you, going into next week, there is a high possibility, firstly, that we can see the market start this consolidation phase for the lateral part of next week, right? Until we get that fundamental data to come through on Wednesday. Now, we could see the market do this on Monday and do that on Tuesday, and then from there we could then potentially see the market start making its actual moves from where it needs to be. And also, if you take your Fibonacci from the low to the high of the impulse, you can see the market has already pulled back to the 0.382, which means that if we do get a rejection from this level, the market is going to go and test this level over here as well. Now, it's very important that we are reactive and not predictive. Now, the way I would approach the situation is I would never trade a market within a consolidation phase. However, what I would wait for is I would not even take the structural level over here into consideration, because we've got the highest impact news that one could hope for coming through this week. If we do get a clear daily break below this level set by Monday or Tuesday, then I would definitely start looking for selling opportunities. But the best thing to do is, from where I'm sitting, is that the stock market sell-off is going to come. And if you want to get into the sell-off, the best place to sell this market would be to set it, to be at this level. If the Nasdaq does want to go higher than this, then that's even better. If we can even go till there, then that will give us a higher selling position in terms of where we might want to see the sell-off take place before the interest rate decision gets announced for next week. But like I said, the best way to approach this, guys, we are going to start moving sideways, because that's normally what the market does. So if you are a scalper, there's a good opportunity for you to probably do this. So this is what I see is going to happen. If the market wants to go lower, we first have to get a clear break below that, which is something I'm probably not going to be looking at. For clear break below this level, and then on the retest, then look, no, that's just going to be a waste of time, because like I tell you, between Monday and Tuesday, we are going to trade in here. So scalpers, you can do your good works, you can do God's work in there, my good friends. Next up, we've got the Dow Jones. Now, the Dow Jones had pullback, even, I'm not want to say exactly as I anticipated, but exactly as I anticipated. We have this massive impulse. After that impulse, you expect a correction, and then we got the 0.38 to pull back there as well. The Dow Jones also broke above the strong level of resistance. It came back, tested as support. Now, I spoke about this level many times, and this is the monthly time frame. I said that we can expect the market to pull back from there, and if you bought it, you should have probably made enough money to quit your job, but you probably didn't, because you didn't believe what I said was true, because So, any case, next up on the weekly time frame. Now on the weekly time frame, we have the Dow Jones on the other side here as well. Also, the last week just recently broken above this level. Again, not as much move to the upside as I would have loved to see for the market to do, but we are still trading in bullish territory for the short term, because we are trading above the strong level of resistance, and all of that resistance is now acting as a level of support. Now, the Dow Jones over here, as you can see, this is a good example of waiting for a daily candle to close, right? So the Dow Jones firstly came into this this area. I'm gonna say it here. So here it is a lot clearer for you guys to see the start of this consolidation phase, right? So you can see this daily candle's close. Now you can learn something here today as well. You can see the market came in here, printed this red candle, right? So the market at this level was trading above this level of resistance. It came back to test it as support. If this market wanted to continue higher, this daily candle would have closed above that level there, confirming that retest of that structural level it created there before that continuation to the upside. You can see how this daily candle failed to close. This next one also failed to close, confirming that this is the start of a consolidation phase. Now, for the Dow Jones, you could probably expect the same thing. I'll give you guys an update again on Wednesday when this data comes out, because why? If this data comes out positive as expected, the Dow Jones is going to continue to the downside, but that is a story for another day. next up I do want to speak about over here is the S&P 500. Now the S&P 500 has got similar price action to the Dow Jones, or and we can see over here as well. So this level over here again acted as a strong level of resistance. The market also printed what's known as a Nova extended W formation. After Nova extended W formation, you expect a pullback to this left leg, which is exactly what the market had done. And from there, you should expect the market to continue higher. But normally what happens before high impact news, the market tends to move sideways before it starts, because this happens due to uncertainty. Think of it in this way. If they tell you that there's a high possibility that the price of oil, okay, could go down, could go up, okay, you will never invest your money in there first before knowing whether it's whether it's going up or going down. So again, Monday, Tuesday, and then Wednesday, I'll give you guys another update on Wednesday once the interest rate decision has been released. Now, next up, we do have the GER30 over here. Now, we know that the ECB had finally hiked interest rates with the 0.50 basis points for the first time since 2011. And this is exactly why we saw the stock market, had that aggressive pullback in the market for the lateral part of last week. But now we can expect this market to continue lower. Now, if you start here on the monthly time frame, firstly, we can see how the market finally, after after so long of speaking about this, and that is why giving you guys an update. Firstly, this market consolidated here from the 1st of July, from the 1st of July up until the 3rd of January, it consolidated. Then it came back, and then it consolidated from the 1st of Feb till the 2nd of May. Finally broke out. All right. So we can see how the market created similar price action there. Support got broken, became a resistance. Support got broken, and it's now acting again once as resistance, further confirming that we can definitely expect the market to continue lower and hit that level over there as well. On the weekly time frame, what do we see now? From a weekly perspective, we can see how the market printed this information. After information, you expect to pull back to the neckline, before the continuation to the downside there as well. Market's also testing this very strong structural level over here. This level acted as support, broke below that, came to test it as resistance multiple times. So we can see how the market is currently testing and rejecting this level. Now, from a daily perspective, we can see how the market is printing this W formation. After a W formation, you expect to pull back to the neckline before potentially seeing that move to the upside. The market could potentially close that gap, but I'm not here to give you long-term advice. I'm just here to tell you what you can expect going into this week. Now, moving into next week, because this market is also has also been sitting over here, has been sitting down. The clear daily break below this level would make room for us to look for short-term selling opportunities for the market to go and test that neckline of the W formation. Alternatively, if anything else comes out that's going to weaken the euro going into next week, then we could expect the market to break above that on the retest and start looking for like continuations to the downside there as well. Next up, we've got the UK100, massive sell-off there at the lateral part of the start of the month. The market then came in, started this sideways moving market over here. Okay, just give me what I want, my friend. Okay, we started moving this market just started moving sideways, and then this is exactly what you can see over here. So there's not much to say about this. So if you are a sideways trader, you could definitely take use of this. So I spot this because I sold the market somewhere around this level. If you on my Instagram, you'd have probably seen that I sold it here. Yeah, I sold it there already. So I'm probably just gonna ride the wave to the downside because of all the patience in the world. Now, the best way to approach this would probably just to wait for the market, okay, to give you a clear daily break below this level and on the retest. Wait for that move to the downside there as well. Just a clear close, daily close, and then on that retest, you can then start looking for that continuation to the downside for the market to continue this consolidation phase to the downside. And don't worry, the market's not going to stop the consolidation phase just because you decided to get into the market. Okay, don't let your brain play games with you. Now, my good friends, that's all from my side. Thank you for your time, and as always, cheers for years.